morning to all traders and welcome to this Tuesday's Market Insights video provided to you by Orbex. It's Tuesday, the 28th of April today, and I'm going to talk about oil as well as gold. There've been some interesting developments in both markets. Starting with oil, of course, we've seen the crude price again tumbling around 20-25% again, as once again the world's largest oil ETF fund started selling forwards future contracts pretty much for the delivery of oil for the months of June. Now, May and June, I mean, this has been done deliberately. As at the same time, of course, despite the fact that we've seen the Saudi Arabia starting cutting oil production ahead of the official production cut date, which is the May 1st, or this Friday. Now, gold on the other side, we've seen the gold falling as well. I mean, there was obviously some profit taking, but we must consider this as a risk-on session actually yesterday, and that was for quite a few reasons. One, of course, we've had the stocks as well as risk rallying pretty much as Oz as well as QE, but not particularly that reason as well. After the Japan's stimulus measures for unlimited QE, okay, we've had, of course, the small business stimulus from the US coming in as well, coming through actually to a level where the technology actually crashed out at some point because there was a rush from small businesses to actually apply for that loan. Anyway, despite that, we've also had some easing lockdown restrictions in New Zealand and Australia, and that also seemed to suggest that there was an increase in risk appetite. And as we know that the dollar has been the safe haven of choice over the past few weeks, not to say months, we've had the dollar falling along with the gold. Now, I want to go ahead and start with the WTI, okay, this time, because we've had this very big decline again due to the fund selling June contracts. I'm still remaining cautious on this particular ending triangle pattern that I have been seeing for months now. I still think that we are in a correction over here. Okay, so we've done wave 1, wave 2, and we're going to go for 3, 4, and 5. We're going to get A, B, and then C. However, I must admit that I start leaning towards the the opportunity of this actually being a W, X, and Y, double zigzag. And why do I say this? Because that would be an ABC, okay, which means that wave C and W subsequently would end anywhere above the 2180. Okay, then we'll get a wave B, and then we'll get another wave C that could again end anywhere above this new fresh high, let's just say, of wave W. Why I believe this is going to be a zigzag is because an impulse move like 1, 2, 3, 4, 5, or a 5-wave move would usually require to extend to a bit to a longer range, to bigger range than a 3 pattern would. So that's why I start seeing that might be the case here, because I don't really see much of difference to the oil markets before demand starts increasing. The productions is not really supporting. I mean, it is something, but it's not going to offset the lack of demand. Okay. Now, that being said, and if we just ignore this, but it is a potential pattern that we can expect to come into play. If we assume that this is 1, 2, 3, 4, and 5, we're still in a correction. Okay, we've got waves A done, B done, and we'll go down for C. 1, 2, 3, 4. I'm expecting another move to the downside to take out wave C. Now, well, this could extend in a multiple degrees, okay, and cross again below the zero. Because don't forget, I mean, we just hear what's happening up to the zero, but there is also another minus 38 or so dollars here to consider, right? So this correction could take us back below zero again. I would not be surprised at all. Okay, and then we'll look from there, from a fresh low to start moving again higher. But I will be honest, the zero level, at least I think the next expiration of contracts might be a little bit hard to be taken out. Okay, so I would be looking for prices to start moving towards the 10 now for a first target, okay, and then take it from there. Also looking what's going to happen with the API and also the EIA report tomorrow. Now on the gold markets, no, this one, gold moved exactly as we expected actually since last week, okay. So we were looking at these, one second, there we go. We're looking at this opportunity pretty much. We said there's two scenarios. We move down here and then we go up, which means this is an ABC, and we move for 1, 2, 3, 4, and 5. We also talked about the possibility of this becoming a B, which is actually what we talked about mainly. This is an ABC, okay? So we're expecting prices to move higher and have a weak attempt to cross above the previous high pretty much. And this is what's happened. So now at this moment, we've had waves 1, 2, and we'll go for 3. It needs to be a little bit multi-degreed as well, multi-faceted. And from here, we're going to get a 4 and a 5. Now, wave C can end anywhere below the 1660, but it could take us even down to the 1560 or 1550. This is the lowest what we can get with wave C over here, right? But I don't think this is going to be the case. I mean, the 100 Fibonacci extension is going to take us to the 1651, which might be a very good level to start considering buys. And don't forget, just a little bit lower before that is also the previous high, okay, which is right at, come on, there we go, it's right at 1645. So I wouldn't be surprised if we start seeing prices then moving higher again to take out the last wave 5, which is minor, intermediate, and also part of the correction C. That is also part of a very big correction of wave B, and then we start looking for prices to move lower as deflation fears are here actually, and are going probably to last for a while. So thank you for watching, and I will see you again tomorrow.